Okay, hi everyone. It's Jamie here, if you don't know already. I'm here with the amazing Jo from Jigsaw Tax, who's given up her time on an Easter Monday to actually help us go through some of these questions that we've been asking quite a lot of, and with what we can do in so many different scenarios and all in different positions. As we know, some are sole traders, some of us are companies, casuals, full-timers, businesses. So we're a mixed bag, Jo.
Okay, that's what I deal with all the time. No worries at all.
Fantastic. Well, some of the questions I'll start kicking off. Also, to everyone who's online, please feel free to ask some questions, and I'll read them out to Jo as we go along.
Yep.
So I just wanted to start off with a question that was asked is, if I've just started my business, well, it's quite new. My business has a very sort of up and down income. How can I self-assess that turnover if I've fallen by the 30% threshold for going for JobKeeper? So what's some of the scenarios that we can look at that, Jo?
Okay, so let's starting with JobKeeper, which I think is one that most people seem to have the most questions about. Okay, the first thing is we're still waiting to hear from the ATO because the government has given the commissioner discretion on how we can self-assess if we don't fit into the criteria. So the criteria is that, assuming that we're in the small business category, which means we're less than $1 billion in turnover, which I'm imagining we will be, that we've had a reduction in our income of 30%, or greater than 30%. And in the original stuff that came out, they said you need to look at it from the year before, or a comparable period from the year before, which would presumably be like the January to March period, or the March month, or it may well be the April month. It just depends on what the situation is. Now, if you haven't been in business for a year, clearly that's going to be very difficult to show that your income's less than a year ago. So they have actually given us a ability to do some sort of self-assessment, and it will be based on something that the commissioner puts out. And at this stage, he hasn't actually given us any information on that. But we believe that the forms will be coming up in the next I believe it's next week, the 20th of April, the forms will be available for us, and that might give us some guideline. But clearly, it's meant to be for people who are suffering from the effects of the COVID-19, shutdown or different measures that have been applied to it. So if you can demonstrate that what's happened in your income is related to that, then you definitely, there's a pretty good chance that you'll be able to get the JobKeeper payment. You have to have been in business before the 1st of March, though, and I think that's just an integrity measure. There's going to be people out there who are going, oh, great, let's set up a company, or let's set up a business on the 5th of March and see if we can apply for it then. And obviously that's not necessarily going to work. So I think I think what I'd be doing if it was me in that situation, I'd be trying to work out how I can demonstrate that things have slowed down or stopped. If it's stopped, I think it should be fairly easy to show that things are different. If it's just slowed down, probably find some other measure to explain it. That's probably what my suggestion would be at this stage, because we haven't been given any definitions from the commissioner yet on how he's going to apply that discretion. Work out how I can demonstrate that things have slowed down or stopped. If it's stopped, I think it should be fairly easy to show that things are different. If it's just slowed down, probably find some other measure to explain it. That's probably what my suggestion would be at this stage, because we haven't been given any definitions from the commissioner yet on how he's going to apply that discretion. Work out how I can demonstrate that things have slowed down or stopped. If it's stopped, I think it should be fairly easy.
Okay, then. So if I'm looking at that, as you said, so I have to base that on my tax returns, correct? Also my quarterly BAS. Is that?
They haven't really told us. So the BAS is going to be like that would be the obvious thing of how you would show that. So it is based on your GST turnover. That's what they're saying. So if you have lodged a BAS prior to if you started in January and you lodged a BAS for January to March, and that had income, and then you can demonstrate that there's nothing after that, you probably have something to show, presumably you would have lodged a BAS before then. You might have done your October to December BAS. I think they're not really telling us yet what we can show, we can do. It is supposedly self-assessment, and there is a fact sheet up there about the integrity measures. So they're saying to us, we can't necessarily know if what you're doing is, if you're saying is correct, but if you don't tell us the right thing, we're going to come down on you. So I think just have your facts straight. And I think it's the intention of why this is here that's important to remember. It's not necessarily to cut people out because of a technicality, although there are some technicalities that will be cutting people out.
I know that some businesses, as an example, might have just started off, say, 6 months before and weren't going to lodge their BAS until like a half, or like a 6 monthly. So how do they find that? Do they have to rush back and do all of their BAS prior to that, just to do that reflection?
Well, first of all, like your choices for lodging your BAS are monthly, quarterly, or annually. So if you've picked an annual BAS basis, I mean, they have put in there that they will look at that. So they will look at things on a case-by-case basis. I mean, surely you'd have some information to show. So, you should be keeping some records about what you're selling. So you would be able to, if you haven't lodged a BAS as at yet because your business is new, and you would surely be able to have some sort of record of what invoices you've sent out since then. So I think that's the important thing, is just having the information there. And how do I demonstrate it? The ATO will obviously look from the first instance at your business activity statement.
Yeah.
After that, and really, if they look at your January to March activity statement, it's probably not going to look that much different, potentially, because the shutdown only started on, the 12th of March is when this sort of started to happen. So, you might have had just as good a January to March as you had the year before. Are you going to have as good in April? Probably not, or most likely not, and definitely not April to June. So if there's some way that you can show, well, you can demonstrate that this is what I did in January to March, but like literally I have nothing to do now because everything that I work on has been shut down, and you can demonstrate that with some sort of proof, then I'm pretty sure the ATO will let you into on the JobKeeper payment.
Okay, fantastic. And does that still apply in regards to that your turnover still, I mean, I think we can definitely, our industry is probably pretty much gone. We lost essentially from the beginning of March to mid-March, our income was diminished pretty much 100%. But just for a scenario, if my turnover is not yet decreased by 30%, but it's forecast maybe next month, and will I still be eligible?
Yeah, so you will be. The difference is going to be that if you can't demonstrate it, probably I would imagine. I mean, we're now halfway through April. The payments aren't going to start coming through until the first week of May anyway. Now, if you can demonstrate that April has been substantially less, I think that will be enough proof. If your April has still been quite good for some reason, and I don't really know how businesses would be great in April and bad after that, but there is potential that could be the case. You can apply for it later on down the track. So this is available till September. If you say it was May though that you decided to apply, and that you could then prove that for May that you were lower, your payments will only go from the time that you apply. It won't go back to the 30th of March. So you're not going to get the JobKeeper back to the 30th of March if you decide that May is when you now are eligible for the JobKeeper payment.
Okay, and you said that a lot of these points will come out and will be released on the 20th of April, correct?
Well, so the 20th of April is when I believe I believe they're going to start to release the forms to apply for JobKeeper. So a lot of people think that they have already applied for JobKeeper because they've registered their interest on the ATO website. Now, all that is literally registering your interest. So if you go in and do that, you put in your name, your ABN, your business contact detail, like very basic details. And all that's doing is registering your interest in that. It doesn't mean you've applied for it. Now, my understanding from some of the forums I've been on is that the rollout of the actual application is going to be through either the ATO like tax agent portal, your business portal, or your individual portal, which I believe is your MyGov. So it's going to go through the online services, basically. When we get that, then once that rolls out, we'll probably have some more understanding of what those questions are. I still believe that most of it's going to be self-assessing. So it'll probably say, have you had a reduction in your turnover? Yes or no. Can you prove that? Yes or no. And if you say yes, then I believe that you will be fine. It's going to be then determining which employees that relates to. So is it, yourself, and is there, depending on how many people you've had working for you and how many people are going to be eligible for the JobKeeper. And then they'll be going back to see have you actually paid those people during that time. So there's quite a lot of things that are going to come into it. That's why they're not starting to roll out the payments until May, because there's a lot of integrity that needs to go into this prior to the payments actually being made to determine who's eligible, which staff members is it eligible for, and have they actually been paid, or are they going to be paid, basically? So, and have they only collecting it from one person too? They can't go out and collect JobKeeper from 3 different employees and also try and get JobSeeker at the same time. So you get JobKeeper, you get JobSeeker, one only, not both, and you can't get it from various sources. So
yeah.
There will be people who try that. I mean, you just know that's going to happen. So
yeah. And just a quick question, because I know there's some people asking about how they, if they're only drawing as directors' fees within the company. But just with all of this, does this affect as a trust, the trust fall within this as well? So can trusts apply for JobSeeker or the cash flow injection, and which we'll talk about a little bit later?
So there seems to be a bit of a misunderstanding about trusts. So trusts are just another structure that we trade through. So you can trade as a company, a sole trader, a partner in a partnership, or a trust. Now, if you trade under a trust, typically you've got a little bit of choice in how you pay yourself, which is probably the one thing that's different to those other structures. So if you're a sole trader, you cannot employ yourself. You obviously can pay yourself out of the income that you've made, but you cannot be an employee in a sole trader business if you are the sole trader. You can employ people, but you can't employ yourself. Same as being a partner in a partnership. So in a partnership, you pay tax on whatever income is made in your share of the partnership. So if you're 50-50, you pay tax on the 50-50%. In a company, you become an employee of your company. Now, I know some people are drawing directors' fees, but they're still technically an employee of their company. They are separate to the company. They're not the same thing. And directors' fees are being brought into it, and we might talk about that in a second. But for a trust, what you can do is you can either be an employee of your trust, or you can take a distribution from your trust. And both of those things are quite legal, and so now if you're an employee of the trust, then you can get the JobKeeper payment for yourself as an employee. And also for anyone else who might be employed through that trust. Now, personally, I trade through a trust, so I'm an employee of my trust, and so are my staff. And then also, trustees may take a distribution of the profits from a trust. Now, some people might not be being an employee of a trust, but they're just taking a distribution from the profits of the trust, in which case they can get JobKeeper, provided they pass all the other eligibility tests. But they can only nominate one trustee or one beneficiary, to get the JobKeeper. So they can't say there's 4 people involved in it and they each get the JobKeeper. Only one of the beneficiaries can get a JobKeeper payment. They can't get it if they're not able to get it as an employee. So you just got to be a little bit careful with that. Similarly, if you're trading through a partnership, so if it's like what we call a mum and dad partnership, husband and wife, only one of the partners can nominate for the JobKeeper payment, not both. So
Okay.
that's probably something that's important to understand.
Okay, so okay. Even in partnership, either one or the other, not both.
No.
Can do that. But could one technically? This might be thinking a little bit outside the box. But could one go for the job keeper and then the one go for the job seeker?
That's right. They could.
Okay.
Now, so long as you pass the eligibility test for the job seeker. So,
Yes.
so that's a lot more, there's a lot more involved in that. So the job keeper, and I think that's why a lot of people are liking the job keeper, because first of all, it's a little bit more. So the job keeper payment is $750 a week or $1,500 a fortnight. The job seeker payment is about $1,100 a fortnight. So it's slightly less. However, with that, you do get the other benefits that might come with that, which would include potentially, there's like the pharmaceutical subsidy, there's a energy subsidy, a telephone allowance, like all these little bits and pieces. They're not worth a lot, but they might be helpful to some people. You also potentially can get rent assistance. Now, if you're a family and you're getting family tax benefit, you're probably eligible for rental assistance anyway. But if you're a single person or have no children, you may want to see if you can get some of the job seeker payments somewhere along the line for one of the people involved and get some rental assistance there, which might be more, a little bit more beneficial to you potentially than just getting 2 lots of JobKeeper. So you have to kind of do your numbers on that. But you're right, like there's nothing, so as a couple, if you're in a, like assuming we're talking about a partnership, which is a couple, there's an income test which cuts you both out of the job seeker payment, and that is if your income is more than $3,086.80 a fortnight for the couple combined. Now that $750 will be included in that. So you probably just need to do your numbers. Obviously, the $750 is going to be less than that. So you probably will be right, but you just need to do your numbers with it. And it's possible that in a partnership, even though it's a legal partnership, one of those people might not actually be working in the partnership. They may have another job somewhere else, and just still be a partner in the partnership and may be able to get the JobKeeper payment from that other job as well as an alternative.
Okay. And just we're talking, when we're talking about the trust and being able to go with job keeper.
Yep.
We know that whether you're a trust business or partnership, as I believe, if you are paying PAYG, you are entitled to the government, which was part of the first stimulus package, the cash injection. So you can get the job keeper if you draw on the as a director's fees. You should be eligible for that if you fall between the 30% of loss of income. However, if you're not PAYG registered, you can't be qualified to get that cash injection. Is that correct?
Yeah. So I think that's one of the technicalities that I think a lot of people are getting caught out on now. So I'm just going to kind of go back and step through this, and this is where we should be and why we should be all right, but why we might not be. So single touch payroll, it's this thing that came in about 3 years ago. And the idea of single touch payroll is that when you pay your employees, you report that directly to the ATO. It happens at the time that you do your payroll, you run your payroll, you press a button, and it tells the ATO who's being paid. Now, this is going to be quite important for anyone who's going to be trying to claim the JobKeeper allowance or the JobKeeper payment. It's going to be based on single touch payroll. Probably the exception to that is going to be your sole traders or your partners in a partnership who don't employ staff. But for anyone who's employing staff, including themselves as directors of a company, or as also they might be employing themselves through a trust, they really should be onto single touch payroll. Now, it was law that we were on single touch payroll as at the 30th of June last year, unless you are what's known as a closely held entity. And a closely held entity means it's just yourself and possibly, another member of your family or, your direct family that are being employed in that entity. And those people have an exemption until the 30th of June this year. And by then, they're supposed to also be on single touch payroll too. Now, what that's meant is for people who are just small companies who just employ themselves, they've probably been taking directors' fees or drawings or whatever you want to call it. And at the end of the year, the accountant goes back and says, right, let's work out how much you've earned and let's pay you tax on that now. And we've never really reported anything. Now, really what we should have been doing all along is reporting at W1 and W2 what you're drawing and withholding some tax for it. And we possibly haven't been doing that now. If you have been doing that, whether you're using single touch payroll or not, and you have been reporting at W1, W2, you'll get that cash flow boost. And that's what we really want to get, because that's a minimum of $20,000 or $10,000 now, 5 and 5 next year. You really want to get that, and you want to see if you can actually somehow go back and register yourself if you haven't already. If you have been registered, you really should be putting a figure in there. If you are taking directors' fees or drawings, you should be reporting that. I would also highly suggest you get on and get yourself onto single touch payroll ASAP and start using that. Now, if you're using Xero, if you're using MYOB, if you're using QBO, they've all got very, very cheap alternatives to get you onto single touch payroll. So look at them and get yourself onto it. Take the time to get yourself sorted with this now. If you can report at W1, W2, or even W1, you're going to get the cash flow boost, and you can also get JobKeeper. If you're not reporting wages anywhere around the track, then you're not going to get cash flow boost. You can only get JobKeeper. So I'd suggest you talk to your accountant and see what you're doing. And if you aren't reporting W1, W2, so if you're not reporting wages as a company director, or you need to find out why you're not, and you need to get it sorted out now. I also will let you know that there was a little bit of time there where the ATO, when they first announced this, they took off from the ATO our ability to go back and register you backdated for W1, W2 for PAYG withholding. They've actually put it back on now. But I would also suggest that you have a pretty good reason for doing it, because again, integrity measures. Why are we suddenly doing this now? I think you just need to go back and think, but if what you're actually doing is drawing money and calling it wages later down the track, I think you probably just need to say, well, I just didn't know I was supposed to do it, and maybe claim a little bit dumb there or something. I don't know. But if you can get that cash flow boost, that's what you want to be getting.
Fantastic. Okay. And what's the max of that? It's 20 to 250. Yeah. Was it?
No, it's 200. So the minimum is 20. So yep. if you withhold nothing, you'll get but you report wages, you'll get a $10,000 payment on your March BAS as a minimum, or a $10,000 credit on your March BAS, I should say, which will offset whatever is payable on that BAS. And then you will also get a $5,000 one in June and another $5,000 one in September. Now that goes up depending on how much PAYG you're withholding. And so clearly, if it's just probably you and yourself, like you're just employing yourself, or you've just got one employee, you're not going to probably go that much above $10,000 in a quarter. But if you're employing a lot of staff, it can go up to $50,000 in the first half of the year. So whatever you report in March, April, May and June, if they reach the $50,000 mark, and there's quite a lot of information in this, so I won't go into it in too much detail, but you can get up to $50,000. Whatever you get in that first half of the year, you get the same again between June, July, August and September in the BASs as a credit, whether you're withholding tax or not. So there's potentially $100,000 coming your way, probably more likely $20,000.
Wow. Okay. That's a good incentive. Sorry, to really get that going and get onto that single touch payroll.
Look, I also think the ATO want you to be on single touch payroll, and a lot of people have tried to avoid it. They're scared of it for some reason. This is, it kind of reminds me back of when they did that $900 payment back in the, I don't know if you remember, in the global financial crisis. And
2008, I think. Yeah.
Yeah. And they gave everyone who'd paid tax or lodged a tax return and paid tax in the previous year a $900 payment. it was amazing how many people came out of the woodwork and lodged tax returns that hadn't lodged for years and years because they wanted their $900 payment. Now, from the tax officer's point of view and the government's point of view, it was a great way to bring people back into the tax system. And, you know, once they'd found them, well, they're in there. Now they've got to pay tax, you know. So, and I think with this is even though that's not the motivation for it, I think deep down they'll be like, right, well, this is an amazing reason to make people go on to single touch payroll. We've been telling them to do it. Now we're going to kind of force their hand at it. If they want to get money from us, they're going to have to go on to single touch payroll.
Yeah. Okay. No, that's brilliant. And yeah, there is a big incentive to do that. And ultimately we have to do it anyway.
That's right. And it's not difficult. I think the difficult thing is that you do have to then start to regularly pay yourself. And, you know, maybe this is a good opportunity to get into that. Our regular pay might be $750 a week. Like, I mean, that's what it's going to be. But get yourself into that habit of, if you are trading through a company or a trust, that you do take a regular paycheck and you kind of treat it that way. So you actually take the money out of your account, and that might be difficult right now when no one has money, but later on down the track, when you're back working, take the money out of your business account and put it into your normal everyday account and use that just like you would if you worked for someone else, because that's what you're supposed to be doing. And I know we don't always do that, and you know, it's so easy just to use the company card to pay for stuff as we go through the checkout or whatever, but we really should be trying to budget and manage our cash a little bit better and a little bit more sensibly. And I think this will help you if you start to get into that habit. I get that $750, I take it out of the account and I put it into my everyday account that's not in my company name. And even if you're a sole trader, you should be doing that too, I really think, because it's a great way to budget.
Okay, and just getting back, I mean that makes sense, 100%. And for employers or companies that actually do employ more than just themselves, what's some of the things that they need to do to really register their employees for that $750
Sure. Okay, so first of all, I think you probably should talk to your employee. Okay, all right, there's a lot around this too. So let's start off with, who are our employees and are they still working for us? So some people might still have employees working for them. So, I mean, not every business is completely shut down. And even if you're in the cafe industry, which is probably a great example, their businesses have slowed down substantially, but not everyone has stopped working. I mean, they might still be doing takeaway or whatever. And I know this is an entertainment industry forum, but, you know, I'm just trying to put it in perspective. I'm sure there's potentially some businesses that are still doing stuff. They're not completely shut down. So if you are still doing stuff and you're still employing your staff to a certain degree, you have to pay them as normal, right? So you can't just go, all right, well, I'm not going to pay you. You get your $750. You pay them for what they do as if they're normal, as if you would normally. So that doesn't stop. But what you need to do is look at those staff members and say, right, are you actually eligible for JobKeeper? And why wouldn't you be eligible for JobKeeper? So one of those things that will take them out of eligibility is how long have they been working for you if they're a casual employee. If they're permanent or permanent part-time, so if they're full-time or permanent part-time and they're an Australian citizen, they're not here under some visa that, you know, so there's different classes of visa. So have a look through what class of visa they're working under if they're not an Australian citizen or a permanent resident. The only class of visa that really lets you through, lets them get this, is the 444, which is basically for New Zealand citizens only. So have a look at that, see if they fit the criteria. If they do, then they should be right to register. You have to tell them that you're getting the JobKeeper payment for them. You have to advise them. So have a look at the fact sheet that tells you what you're supposed to do with your staff members. Now, if they're working for you, you pay them what they work for. If they haven't earned the $750 for the week, you have to pay them that top-up payment to make $750. So you actually physically have to pay them that money. If they haven't made the $750 for the week, you don't have to pay super on the amount that's the top-up payment, but you still would have to pay super on the amount that they've worked for you, assuming they've worked more than $450 in a month and all that criteria. So check their eligibility, let them know you're claiming it. Now, if they've been stood down and they're just not working because there's absolutely nothing for them to do, then I would probably talk to them first and say, I can claim JobKeeper for you. Would you like me to do that? Because they might say, well, actually, I'm already getting JobSeeker. I'm getting my rental assistance. I'm getting all these other things. I'm quite happy with what I have right now. I don't want to change that. So just ask them about that first. And then if they do want to get it, you're actually meant to start paying them the $750 a week or $1,500 a fortnight. I'm concerned at how you're supposed to do that if you've got no money. And that might be something that cuts you out of actually giving them the JobKeeper payment to start with. The fact sheet tells you that you should talk to your bank about that and see if you can get an overdraft. And, you know, try getting in contact with the bank anytime lately, and you'll probably know that that's the biggest one of the most difficult things to do. So I'm not really sure what you're supposed to do with that. I think it really comes down to a fact by fact basis, but yeah, that's pretty much it. And then you just have to register that these are the people you're claiming for when you do your registration.
Okay, I've actually just got a question from Matt.
Yep.
And there's a couple of things I'll follow on from that, but I'll read out Matt's question now. He says, I'm a director that employs only myself on the PAYG basis.
Yep.
Can I initially claim JobSeeker and then transfer to JobKeeper? I'll just read a bit more. Further down the track, once my company receives a PAYG rebate and has a bit more cash flow. So can they initially go onto that
Yes.
JobSeeker, as I believe you can, and then stop that and go to the JobKeeper? And
you can. Yes, you can do that. Now, if you're a director of your own company and you're paying yourself $750 a week from the 1st of April, which is when the JobKeeper payment is, or back down to the 30th of March. So 30th of March, not the 1st of April. Does the government necessarily know that you haven't transferred the money? I guess that's my question. I would be saying that I want to stop the JobSeeker, and then from that date starting to pay yourself the JobKeeper. And even though you may not have the cash flow to pay it, you would still register that you've paid it. So in your single touch payroll, you would be putting that through to say that you've paid your $750. And then, you know, as the owner of a company, if you don't physically pay that money across, I would imagine you could just do it there. And like once you get the money through, that would be definitely my suggestion. Probably technically you're meant to transfer the money, but who is going to really, like, when you do single touch payroll, you're not telling them where the money's gone. All you're telling them is what you've paid the staff member. The difference is going to be if it's an external employee and they're coming to you and saying, well, you know, you haven't paid me. The payment's going to be monthly as well. So it means you're going to have to always fund 1 month of JobKeeper for your staff members. I think that's going to be a lot more difficult than yourself. I mean, a lot of us in business might run our payroll but don't have the money to pay ourselves. And I know I've done that, right? So, and you know, I'll pay myself when the money comes in. So that's how I would be treating it if it's for you. And yet, definitely, you're going to be out. You've got the PAYG, and you'll get your cash flow booster. That might give you the ability to keep up to date and catch up on that a bit then.
Okay, so just because that, as long as we basically show, this probably comes down to more as a single person paying yourself.
Yeah.
So we can actually declare that later, as long as we demonstrate in our W1, W2 that we are, or our single touch payroll. And then we can go, okay, the JobSeeker, I can then come off that and go onto my JobKeeper once that's you know, done, and you can prove that you have been paying yourself. Is there a conflict with that? If you're saying to the JobSeeker, you know, you're claiming those payments, and then in the background you're saying, well, I am getting $750
Well, that's the thing. You can only get one at a time. So that's what they're going to, the ATO or Centrelink or whoever it is that's looking at it, they're going to look at it and say, right, well, if you've already got JobSeeker up until today, like if you're still getting JobSeeker, they're not going to back pay your JobKeeper. They'll back pay it till you say, okay, now I want to go off it and I'm going to go into JobKeeper. So, you know, I think it comes down, you can only get one. You can't get both. So, yeah. And look, you know, you may be you might feel more comfortable just waiting till we get to that form and making sure you can get it. Like I wouldn't go and cut off my job seeker now. If you're already getting it and it's already been approved, I wouldn't cut it off until you know that you're definitely right to get JobKeeper. Maybe even wait till that cash flow boost comes through, which it was meant to come through on the 28th of April.
Yeah.
And then start from there. Like I just think that gives you, like you want to make sure you've got enough money to keep you going, because if you do start it now, you're not going to get, like, they're paying it in May, they're back paying it for a month, which means the next one won't probably come through till June. So you just need to keep yourself afloat for that period of time, and you just need to really do your numbers and see. And if you're getting JobSeeker and it's working for you, well, stick with it. I think it's that, like, because technically if it's just you and you've claimed wages up till March, and then you start JobSeeker, and then you'll still get that $5,000 in June and September, whether you're paying yourself or not. So, yeah, I guess the difference is JobSeeker has a lot more information you have to provide to Centrelink to get it. JobKeeper is probably a lot easier to get, and the strings attached are fairly minor if you're doing it properly.
Yeah. Okay. And
that makes sense. So
yeah, no, that's absolutely brilliant. I hope that answers your question, Matt. But keep the questions coming. Just touching back on our workers. So if a company does have workers, they've stood them down. I know there was a question saying, well, even though the business is not running, it's ticking on the background, they've actually got no money coming through the door. Can they pay their workers a JobKeeper fee? Can they apply for it? Do they actually need income coming in through the door to be able to do that? Okay.
No, they don't, but they do need to be able to pay the staff that money. That's the thing. So, so if they're stood down and they're not like that, that's fine. So stood down so there's a difference between being stood down and being made redundant. So stood down just means that, hey, and this is what the JobKeeper payment is intended for, by the way. It's because you've got an employee, you can't keep them employed because you've got nothing happening right now, but you don't want to lose them, okay? So you don't want to, it's not like you want them to go out and find another job necessarily. You want them to be able to come back and work for you when things come back to normal. So the point of being stood down means you're not paying them out their leave. You're not, like, they're not losing their entitlements or anything like that. But what you are going to be doing is paying them this JobKeeper to keep them on your books. Doesn't matter if you're getting any income at all. You do not have to be active. You obviously had to have been at some point beforehand, but the reason you're doing this is because you've been shut down. And you don't have to make them work for it. They can stay at home and watch Netflix if they want. That's fine. But the point is that when things go back to normal, they'll hopefully come back and work for you.
And if the employer can't, because they're obviously just keeping the doors open and they can't top up their normal wage, can they say, well, your hours have been not 38 hours a week, as an example, it's now down to 20 hours a week for that, $7.50 a fortnight?
Yeah, okay. So this is an interesting one, and this is probably starting to get into Fair Work territory, and I'm not an expert at Fair Work, but my understanding is that, you can negotiate with the employee. I mean, if you can't give them 38 hours a week of work, then, their choice is that they get stood down, or you can negotiate a different temporary arrangement with them so they get paid for what they're doing. Mm-hmm. Now, I do know some people are trying to make sure that there's like 20 hours of work for their staff so that covers the $750. You don't have to do that. Like, if it was me, I'd be looking at it going, right, well, what do I need my staff there for? If I need them there for 5 hours a week, then I'll employ them for 5 hours a week. If I need them there for 38 hours a week, I'll employ them for 38 hours a week. But you probably need to just check with the awards that your staff are under or any agreements. But if you can't afford to pay them for full-time work, and that's what they are, I'd probably be realistically looking at having them stand down, because that you'd be able to do that under Fair Work, and then just trying to cope without it. And I think that's what most people have tended to do. And some people go, well, look, I don't mind doing a little bit, and the staff are in on it too. They're not necessarily out there. Hopefully, most people, have been pretty compassionate about this. They understand you've got no income.
Yeah.
So you can't get blood out of a stone, So if they can get something, that's probably better for them than nothing. And you just need to talk to them and explain what's going on. So.
Okay, that makes sense. Absolutely. I've got a couple more questions here, but I just want to follow on before I go to the questions. There was and we were talking about before about justifying your income to get the JobKeeper. Now, as a sole trader and you're not GST registered, are you eligible for JobKeeper, or do you have to go down the JobSeeker avenue?
No, that's okay. So you don't have to be registered for GST. It is based on your GST turnover. But it doesn't mean well, it actually says that under the GST laws, only Australian-based sales are included in the turnover test. So that in itself could raise a few problems for those of you who do work overseas. So that might be something we need to have a look at. But you don't have to be registered for GST. You just have to have made taxable sales in Australia. Taxable sales means that if you were registered for GST, they would be GST applicable. So, no, you don't have to be registered for GST to get the JobKeeper payment.
Okay, so you can be a sole trader, work under that was 80,000 threshold, as I believe, or whatever it is, 75, and you should be able to still go down the JobKeeper route.
Yeah, I've not seen anywhere where it says that you have to actually have turnover above 75,000. I know for some of those grants that are out there, that's what they expect, that you need to be GST registered, but I haven't seen for JobKeeper that you have to be GST registered.
Okay. Oh, bless you.
Sorry, I'm just talking too much.
Oh, no, but yeah, and we thank you for that. Thank you. I've got a question from Brendan. He says, my main employment is for a council-run venue. I am casual and have been for over 12 months. As I'm aware, council employees are not eligible under JobKeeper. I am also a sole trader and I freelance operate. I plan to apply for as a sole trader, as I can easily show loss of income. Is there any fine print that will render me ineligible due to my casual employment applying as a sole trader?
No, there's not. I don't believe so. If you're still getting work at it doesn't say that you can't work if you're getting JobKeeper either. Like it doesn't state that you can't go and get another job. So if you can get it through your sole trader, I definitely. I haven't heard about the council part, but it may. It's probably because council's not actually a business and it's not a not-for-profit either. So government structures are, I believe, exempt from the JobKeeper payment, which is probably where that's going to come in. So yeah, look, I mean, if you do still get a little bit of casual work through the council thing, you're not prohibited from doing that. And the JobKeeper payment should be fine. It does specifically say in the fact sheet that you can work. You can still work for someone else as well. You don't have to just get that, but you can only get it once, obviously. So
yeah. So even though he was casual for a council-run venue, so he should be able to go under his sole trader and go for his job.
Yes.
Go for JobKeeper.
Yeah. So presumably, so I'm guessing you might if it was say a theatre or something that was run by the council, or a entertainment centre or something, which is possibly what he's talking about. That if you're being paid by council directly, you wouldn't be able to get that, even though your job, you have substantial reduction in your turnover or in your employment. But I'd be doing it under the sole trader if you've got that option.
And does a sole trader have to how can I say it, prove a certain amount of income or provide anything if their predominant work was a casual?
Look, I mean, there are non-commercial loss rules that may apply. They haven't actually said that a sole trader has to pass any particular tests,
okay.
Except I'm imagining there would be some integrity measures in there to say that it is a genuine business, and that comes into play with. So, I mean, some of the tests would be, I guess it would come down to how much turnover you have got. So for the non-commercial loss test rules, which is something that I don't know if anyone has ever had to deal with, but so if you go and decide that, I'll give you a great, this is the example I always give my clients about non-commercial loss rules, right? So they want to know whether what you're doing is actually a genuine business or a hobby. So if you just go and set up a little sole trader business and it's not really doing much, how do they determine whether that's a real business or not? And there's a couple of rules that come into it. You need to, be systematic in what you're doing and have a business plan, all this sort of stuff, which all sounds lovely, and anyone can write that if they really want to. So what they do is they bring in these other tests and say, right, well, have you turned over more than $20,000 as a sole trader or a partner in a partnership? And that's one of the things that they then determine. If you've turned over more than $20,000, you are a business. Have you made money? Like if you're making money out of it, well, then you're probably a business, but one of the examples I always give is scrapbooking. And I don't know, if there's any avid scrapbookers out there, but it was a real big thing a couple of years ago where all these women were, just loving their scrapbooking, and you were coming, oh, I'm getting an ABN, I'm going to go into the business of scrapbooking. All right, what is that, and they go, oh, I'm buying all this stuff and I'm showing people how to do scrapbooking, and they'll buy stuff off me, and they spent like thousands of dollars and maybe turned over $200, at the end of the day from family and friends. Clearly that was a hobby, right? It's not a business. So that's why those rules are in place, because people can make anything a business if they want to. So if you look like what you're doing is a genuine business and you're actually raising invoices, and it's not just something that's been orchestrated for the sake of this, I think you should be right. So just from the sole trader freelancing thing, I think you should be okay.
Okay. No, that's excellent. Just another thing in regards to sole traders, and this is something that I have talked about a little bit before. I know that apparently you can get your pay-as-you-go.
Yep.
Some sole traders will pay quarterly.
Pay-as-you-go installment.
Installments.
Yep.
Now, it is possible to get the last 2 quarters back, to both your September and December, and set that value down to 0, correct?
Correct. So when you do your March BAS, you can go in and it will either give you have 2 options, and you would have already elected that option back when you did your September BAS, or your September BAS in October. So the options are that you pay a set amount or you pay a percentage of your turnover. When you go to do that, obviously if you've got an accountant helping you with it, talk to them about it, but you can actually vary your installment to 0. And if you do vary your installment to 0, you then have the option to call back the other 2 installments that you've paid for the year. And that could give you a nice little cash flow boost. Now, it may mean that you're going to have to pay tax next year, because you probably have made money between July and March. But right now, if we're just trying to get through, that could be a nice way to get a bit of extra money in your pocket.
Okay, perfect. No, that's spot on. Also too, I know New South Wales has a small business $10,000 grant. How do we qualify? And I, as I understand that, you only can qualify for that if you're not PAYG registered.
No. It's if you don't pay payroll tax. So payroll tax is a lovely tax that anyone who has to pay for it would absolutely hate. So it's a tax for employing people over a certain amount. So as you become a bigger business and you get over a certain amount of wages, then you start to pay payroll tax. Now, this small business grant, I actually have just spent the morning going through all the different states to see what business grants are out there.
Oh, wow.
Yeah, it was very exciting. I lead such an exciting life, don't I? So, there's a similar grant in Victoria, South Australia. I think they're probably the main 2. Tasmania has some grants as well, and the Northern Territory have some grants too. So, but the $10,000 one seems to be been replicated at least in Victoria and South Australia. So have a bit of a look. I should remember, I just wrote this paper about it, but anyway. So with those, it's for people who don't have to pay payroll tax. So it means that you're under the payroll tax threshold. In New South Wales, that's $900,000 worth of wages in a year. In Victoria, I think it's 650,000, although I might be wrong. So it's different depending on what state you're in. So have a look at your relevant authorities to see which one applies to you. Now, to get that, you have to have, in every case, you have to have turned over more than $75,000. You have to be able to prove that you have had a negative impact from the COVID, like whatever the regulation is. That is typically assessed at 30% reduction in your turnover.
Is this for this finance based on this financial year or previous financial year?
It doesn't actually. So again, for most of these, the application hasn't come out yet. The one for Victoria has, but you have to go online to apply for it. So I'm like, I don't really want to go in and start an application because I don't have a business in Victoria. But look, I think they will. What they've said in both of those ones, particularly in Victoria and New South Wales, is that they've said this is for these industries specifically. Now, it doesn't limit it to that, but you have to demonstrate. All it says is you have to demonstrate you've had a significant turnover decrease. How we do that, I don't know, but I'm sure it'd be fairly easy to establish that if you are not working anymore. And specifically in both of those talks about the arts and entertainment industry. So you guys are included so long as you have that more than $75,000 turnover. You have to employ someone, at least one person. And you have to be under the payroll tax threshold, and you have to have been in business prior to the date that the announcement was made, which was different in different states, but basically you want to have been in business before the 1st of March, and that you work in that state. I guess that's the other thing. So you can't sort of go, oh, well, actually, I like the one for Tasmania, even though I'm based in New South Wales. So you have to apply for the one that's relevant to your state. So
yeah, okay. So and yeah, I did read that as well, that the New South Wales lodgement with that is not out yet. So the guidelines in regards to that is sit and wait for New South Wales.
Yeah, so yeah, Victoria's is up online. So if you are in Victoria, maybe have a bit of a look at that, and it'd be interesting to see what you have to provide for that. But yeah.
Okay, I've got a question here from Clint. I think this is to do. This might not be able to answer it because I think it's getting into that area out of what we're talking about. But can an employer force an employee to be using up their leave entitlements and use JobSeeker to be paying them that leave entitlement? I don't know if that makes sense. So can an employer force?
Okay.
Employee?
No, they definitely can't use JobSeeker to pay the leave entitlement.
No, I think that's what the question was, and that's from Clint. No, they can't be using the JobSeeker to be paying for their leave entitlement.
Oh no.
Oh, sorry, you just broke up there.
I mean, yeah, no, I know I was a bit unstable there, but no, I don't think you can. So I can't see how you could do that. Yeah.
Okay. Sorry, yeah, JobKeeper we're talking about, not the JobSeeker. Another one from Jason. I have an employee that has left for 3 months, leave without pay, and has gone to work elsewhere for this time. When he returns, can I then put him on JobKeeper? This is from Jason.
Good question. I think it says were they employed on the 1st of March.
Yes.
And to be able to be eligible for it. If they're on leave without pay, then they may still technically be employed. It's a good question. I'm not really 100% sure of the answer on that. And I guess it might be determined by what kind of leave they were on as well. So if they were on maternity leave, for example, they'd probably still be considered to be an employee on the 1st of March. I think as long as you haven't terminated them, it should be okay.
So if they've been stood down, that's probably more likely scenario than, as I read it here, that has left for 3 months. So I think there's that.
Yeah, it could be.
If there's
So
a
many people
termination.
go on leave without pay and still be. So they've gone to work for someone else. That might, yeah, like if you terminated them, then that's going to be an issue. I don't know, to be honest with you. That might be something I'd need to find some more clarification on. There hasn't really been anything specifically said about that. But if they were an employee of yours on the 1st of March, they're eligible. Now, it doesn't say that you have to have paid them on the 1st of March. It just means they were an employee. So if you haven't told the tax office that they don't work for you anymore, then they probably would be okay.
Okay, spot on. Okay,
But I can't guarantee that. That's just my thought.
Yeah. I think some of these employment things are probably getting a little bit outside of what we hear. So we'll just as a little hello, is we'll try our best to answer as much as we can if it starts getting into employment.
Yeah.
And stuff like that.
And some of this stuff, like, I mean, look, I've been extensively reading it, but some of this stuff is still a little bit of a mystery to me too. I only have to go off what the same things as everyone else has to go off. They did put the law through the other day, and it's not particularly providing a lot of any more guidance than what we already have from the Treasury fact sheets. And I have tried to read legislation, but I haven't found anything in there that sort of jumped out at me as, oh, that's exciting and interesting and different. Often we get a lot more information from the government, from the ATO, but the ATO are still a little bit slow to respond on this as well. So, it only particularly JobKeeper only passed the other day. And so, the coders are madly trying to build code to be able to cope with all these changes as well. So there's like a lot of stuff going on in the background. So I'm trying my hardest to answer them.
Oh no, you've been super amazing. I've got some more questions.
Yeah, sure.
I've got one here from Rodney, and I think this is we touched base on this just in regards to how that applies to paying superannuation. In addition or part of, or how that works with paying our superannuation. But Rodney said, with JobKeeper, when I pay myself the $1,500 a fortnight, do I pay that as an allowance or work out based on an hourly rate and report that as many hours ? So do they report that as hours? But if I pay as hours worked, I need to also pay super ? I'm currently not working at all.
Okay, so if you're not working at all, I guess it does come down to what system you're using as well. I know Xero, for example, put through a temporary fix on how to do this. So I'm sure there's going to be more information coming out from the various providers soon. But what Xero have said is if you are not working at all, or you're paying someone who is just getting the $750, you pay it as an allowance. Or you set up as an allowance with no super, but it will have tax deducted from it. So if you're, I would, it depends on what system you are. You might be able to say, well, I'm just paying myself $750. You might want to say that you're working a certain number of hours to do that. But I would think if you pay an allowance, it'd be a one figure, like an allowance of $750 for the week. No super involved in it, but tax will be taken out of that.
But
that's how I would.
Okay, but as I believe, JobKeeper and JobSeeker are both taxed as with income tax, as I believe. So
they're also taken into account for other things such as, family tax benefit payments for child support, anything. They're taxable income.
Yeah. So just going back to Rodney, if he puts that through as an allowance rather than a certain amount of hours, he then could not be liable to pay that superannuation on top.
Yeah. So when you set up the allowance in your system, you would tick it that it's an allowance that doesn't have superannuation guarantee applied to it.
Okay. Gotcha. And obviously, directors that are doing drawings, they could just keep it the same way as doing drawing directors, as I believe.
Probably, yeah.
Yeah. Okay.
Unless they want to set up the single touch payroll thing and do it that way.
Yes, and yeah, which is, I think, is.
I would highly suggest you do.
Yeah. yes, I've done as much. Shut down. I'm just seeing. I've got hundreds and hundreds of thank yous on this thing, so it's absolutely phenomenal. I'm just going to check my any more questions from the EI members. Please put them through, because I might close up with a couple of other questions and let this lovely lady go and enjoy the rest of her,
a drink of
Monday.
water.
Yes.
Or maybe
wine. Well, it is Easter Monday.
Yeah.
Now, this comes back to a job seeker a question, and I know that it is. I'll read this question.
Yeah, sure.
Will job seeker payments be affected if a married couple has been separated? So obviously the scenario is here: a couple's separated. They've been separated for a while. The partner might be over the 80,000 threshold, which obviously affects the partner income. Do you know much about that?
Well, I mean, I'd be telling Centrelink, you need to advise Centrelink that you're separated. I mean, you don't have to be divorced. You can be legally separated, which means you're not together anymore, and you would be assessed as a single person. You shouldn't be assessed as a partner if you're not with that person anymore. And I would talk to Centrelink about that. I can't see any particular benefit to you trying or missing out on something because you're no longer with that person and they're earning money, because I don't imagine they're going to be giving that money to you to share the burden.
No, well, exactly right, 100%. Little question in regards to super. What's our that? I think that's just opened up now that we can start applying for that. Is that
the $10,000 withdrawal of super?
Yes. Yeah.
Yeah. Okay. My understanding is it may be on them now. I was reading something today, and I thought that may have not been till the 20th, but I might be wrong. There's so many dates flying around in my head right now. You will do that through your MyGov account.
Yeah.
So if you are eligible for that, you just go onto MyGov and you'll pretty much fill out the details on that.
Yeah.
And my understanding is that, again, it's a self-declaration that you are able to get that money out based on the criteria. The criteria is that you can get the job seeker payment, or you've been made redundant, or you've had a 20% reduction. I think it's 20% reduction in your hours worked or your income or something like that. So have a look at the criteria. When you go on to apply for it, it will tell you what that criteria is, and it'll probably make you go through a number of steps to make sure that you are very well aware of whether you're saying the wrong thing or not.
Yeah.
And if you're saying the wrong thing, probably don't do it. But if you are saying the right thing, just keep working through it. And then I believe that the ATO will be sending the information to your super fund. It should only take 1 to 2 days after you've gone through that process, and you should be able to get your money fairly quickly once you've been through that. Just bear in mind on that. I just wanted to, if you really don't need to take your super, I mean, the markets are at an all-time low right now, so you're pulling out money at the very bottom of the market. So I'd only do it if you really, really need it to get through. I just wouldn't be using it as my first point of call to get money out of super. I'd also strongly encourage you not to do the thing that's been going around about taking the money out of super and then putting it back into superannuation to make it a tax-deductible contribution. I have heard a few people talk about that the ATO are not going to be very favourable to that. So I'd just be very careful with that.
Yeah, no, definitely. No, spot on. I've just got a question here from Zach. And he says, if working for a company that has closed its doors and therefore not paying its employees, would they have to pay the $750 this pay period, or is it backdated from the 1st of May?
Okay, so it's meant to be paid now. And that's what I mean. Like, it's meant to have been paid from there. And look, I mean, there will people who will probably say that they have to backdate it from the 1st of May. I guess it's up to you. I have had people ask me that question too. It says that you're meant to have paid that money. Now, if your only option is to get JobKeeper and you're not going to get JobSeeker, and you might be prepared to go work with your employer and say, look, I'm happy to wait till you get that money and then pay me then, because you might not have any other alternative. If they can't pay you, then, but technically they're meant to have paid you. Yeah. But like I said, if you don't have, like, I mean, I've had businesses say to me, I just don't have the cash flow. And if you've got like 10 employees and you've got to pay them a month, that's $30,000. Like, where's that coming from?
Exactly.
So, and you've got to fund that for the next, into the future. Like, that money, it's always going to be paid a month in arrears. So if they can't get that money, but look, I guess I just have a talk to them and see what you want to do with that. But if they can't pay it to you and you aren't prepared to wait, then you might have to go on JobSeeker, not JobKeeper.
Yeah, yeah. And with JobSeeker, I know that the only major hurdles, I think we mentioned before, talked about before, it's probably best to talk to Centrelink about what you're eligible for. But do you know any kind of eligibility in regards to getting JobSeeker? Is there certain thresholds that we have to push through? I know that these are some of the questions that are coming out from casuals,
yeah,
and also full-timers that have been stood down or ready to go.
Okay, so it is based on, so the JobSeeker is actually what used to be called New Start Allowance. They've kind of changed the name for it. So JobSeeker is based on the income that you're earning as to how much you can get. So JobSeeker has always been a very notoriously low-paying benefit. So, you know, people don't necessarily want to be on unemployment benefits long term. What they've done is added to it a $550 extra payment per fortnight, which brings it up to a much more acceptable payment, which if you're getting the full JobSeeker payment plus the supplement, which is the $550, it's meant to equate to about $1,100 per fortnight. To get it, you'll have to be providing your income details, and they are probably going to be able to tell those through single touch payroll how much you're earning. So you might find the payment gets adjusted if you're working a little bit but not enough or not as much as you were. So the threshold now for people in a partnership has gone up to being $3,086 per fortnight as a partnership, as in two people, a couple, to be eligible to get this. So it's going to be probably, I haven't looked up the figure for a single person, but I think it's you know, you can still earn some money. It's not like you can't earn anything. Even if you can get that $1 of JobSeeker, you'll get the full $550 of the JobSeeker supplement, which is that $550. They have relaxed a few restrictions on it. So what they have relaxed is that you should be looking for another job, which is obviously what used to be the case with New Start. They've also relaxed the fact that you need to provide a letter from your employee or an employment separation certificate or anything like that. However, they will still want to check that you are who you are, and they want to check that you aren't earning money that you're not telling them about. So they will do some checks about this. So you've got to provide them with information. That's why it's probably going to be more difficult to get this than the JobKeeper. But if you're not getting any money at all, well, or if you're only getting a little bit, you can definitely apply for it. They've also waived what's called the, hang on, let me just find the term for it. I can't find it now, but there's some liquidity asset waiting period or liquid asset waiting period that used to apply for New Start, which basically means if you're a single person and you have more than $5,500 in the bank account, you're going to have to wait a certain period before you can start to get paid, up to 13 weeks, depending on how much money you have in your bank account. So they want you to use your money first. They've waived that. So if you've got savings, you don't have to report it to them, and it doesn't mean that you can't get it. But if you are getting paid from someone, it is going to affect how much it is. If your partner's getting paid, that's going to affect how much you get. But look, I would talk to Centrelink. If you do have children, there are some benefits that are additional that you might find are helpful as well, like the parenting payment. And so there's a lot of stuff in the whole Department of, well, what are they called now? Services Australia, Department of Human Services, Centrelink realm that do a bit of research and see what you can get. And go online. You can do all your applications for it now on MyGov. You don't have to go into the office to get it. You can express your interest through MyGov, and then I can come back to you with your customer reference number if you've never been through the Centrelink system before. If you have been through Centrelink before, somewhere down the track, so see if you can find that customer reference number, and you should be able to apply straight away online without too much difficulty.
Fantastic. Look, Jo, you've been an absolute star. So I want to thank you on behalf of ENEI. Everyone, big thank you to Jo from Jigsaw Tax. You have been an absolute superstar.
Look, it's good. I like to help everyone. You know, I know we've been in contact about this a few times now, Jamie, and I know you guys are really struggling out there, and I guess I'm in the fortunate position to understand a little bit. You know, I can't do what you guys do. I can't sing and dance or perform or provide entertainment to people, but I can read about tax law, which makes me a really boring person. But you know, if I can help you guys out, I mean, we just want to all get back up and doing our job again. So it's been really nice if I can help you guys, and I will stay in the forum on the Facebook page and keep my eye out. And if there's some questions out there, I'm more than happy to help answer them. So.
Again, I don't think we can thank you enough. You've just been an absolute superstar, and from all of us, our hearts go to you, because you know, just to have a bit of a, you know, a pathway through some of this jargon, and you know, what's this new start, JobSeeker, JobKeeper, you know, it's just like we just want to do our gigs, we just want to do our thing, and to have someone help us navigate through this is just phenomenal. So again, I thank you so much.
No worries at all. We'll enjoy the rest of your Easter weekend and stay safe, everyone. So
absolutely.